Good day, everyone. My name is Yana Mudranova, and I am the Data and Disclosure Working Group Coordinator at the Sustainable Banking and Finance Network, and I will moderate today's session. Disclosure is a pressing topic, and it is my pleasure to see everyone here today for this first webinar session entitled Deep Dive into Jurisdictional Approaches. Before delving into the details of sustainability disclosure, I would like to hand over to Rong Zhang, SBFN Global Coordinator, for a few words of welcome.
Thank you very much, Yana, and good morning, good afternoon, and good evening to all our participants joining from around the world. On behalf of SBFN and International Finance Corporation, IFC, which serves as SBFN Secretariat, I'm delighted to welcome you all to this webinar series on IFRS Sustainability Disclosure Standards. I'm particularly pleased that this webinar series represents the continued collaboration between IFC, SBFN, and IFR Foundation, bring together our complementary expertise to support SBFN members and partners on this journey. As you know, SBFN is a capacity building and a knowledge sharing platform for financial regulators and industry association from the developing countries. It currently comprises 97 member institutions from 72 countries. Together, they represent $68 trillion, about 92% of the total banking assets in the emerging market. As financial markets evolve, sustainability has become central to investment decisions and risk management. Financial regulators and industry association emerging market represented by SBFN members face unique challenges in navigating this rapidly changing landscape. In addition to the challenges, it's also important to recognize that the financial sector plays a critical role in creating opportunities for sustainability. So this webinar series is one way for us to help you harvest those opportunities. As you might be aware, this is not our first collaboration within the IFR Foundation. In September last year, we co-hosted a session for SBFN members and UNEP-FI that delivered 3.5 hours in-depth training on ISSB S1 and S2 standards, and the recording and learning materials from the session are available on our website. I would like to encourage you to explore them. And today's session will focus more on how regulators and industry associations can go about adopting the standards. We have designed this session to be practical, drawing on the expertise of the IFRS Foundation and experiences of regulators. Now, I'm very honored to introduce Mr. Jingdong Hua, ISSB Vice Chair and a long-time supporter of SBFN since his time as part of the senior management of the World Bank Group. I would like to invite Jingdong to share his perspective on this important initiative. Last but not least, I also want to take this opportunity to thank Jingdong and his team for this excellent partnership. Jingdong, the floor is yours.
Thank you very much, Ron. Thank you and IFC colleagues for this terrific opportunity and for the strong partnership where we're working together to converge sustainability reporting into a global language that we all speak about. So very honored to to share my perspective. And also I want to go back indeed, Ron, as you said, in my IFC days, I really wanted to salute the critical role Sustainable Banking and Finance Network has played in motivating financial institutions and regulators in emerging market countries in terms of coming together, to mobilize critically needed financing for economic development, for climate change, and so great work, Ron, you are doing, you and your team. So I'll be very brief, and my apologies because I have another meeting in 20 minutes that I have to get off. But I want to tell two stories to begin with. The first story is about the climate change story. That is, the United Nations Climate Commission, UNFCCC, publishes a research paper every year. And I think when they published their annual update in the year 2007, that was the first year when they established a clear relationship between climate change and human activities. So among many people who read the report were some Swedish investors, pension funds. And they got together, they said, is there something that we can do, to help with climate financing, to mitigate the impact, negative impact of climate change? So they got together, they went to their bank, which in turn contacted the World Bank Treasury. And, the world's first green bond was born in 2008. A couple of years later, it was actually IFC Treasury that issued the world's first global benchmark size green bond, 1 billion green bonds in the year 2013, that really made a niche product into a mainstream financial product. So I just wanted to say that nowadays, when you look back from 2008, it's not a very long time, over $6 trillion bonds, what we call label bonds, green bonds, sustainable bond, gender bond, have been issued. So I tell this story to tell the power that capital market recognize the role that in addition to your credit quality, investors also care about issues. And if you can draw investor attention, to a theme that will make sure the investors will, generate a return, but also to invest in a thematic impact story, they will do it, right? So this is where a lot of the banking sector in your network has been doing, issuing green bonds, supporting climate change, so on and so forth. The second story I want to tell is that many years ago, actually it was in the 1970s, a number of national accounting standard bodies got together because at that time, global financial market and capital market were very fragmented, right? It's very difficult for a company to go from their home country to a different country to issue securities to raise funding, because you have to do a lot of reconciliation in your financial reporting because every country uses a different accounting standard. So those national accounting bodies came together and said, what if we come together, we create an international accounting standard so that everyone will speak this same accounting language to facilitate much easier decision-making by investors, right? Because then you can compare apples to apples. So an international accounting standard committee was created. It was a little bit slow going until the early 2000s when IOSCO, which is the International Organization of Securities Regulator, where Jonathan used to work as a senior executive, endorsed this international accounting standard, saying, "Hey, national, securities regulators, you should, and we encourage you to adopt this standard, which is a single common language that all capital market issuers could use, right, to facilitate much easier access to capital market globally, to make global capital market more transparent, more efficient, more comparable." So that endorsement certainly vastly accelerated the pace of adoption in jurisdictions, meaning mandatory adoption. So up till today, we have 147 jurisdictions that have mandated the use of international accounting standards. Even the United States, which was convergent to the international accounting standards until the global financial crisis in 2008, if you're a foreign entity issuing in the US capital market, the US SEC recognizes equivalency if you are reporting under the International Accounting Standard of the IFRS Foundation, right? So on the accounting side, we have truly achieved global single language. So the motivation for global policymakers and the foundation, IFRS Foundation, to take on sustainability reporting is to replicate what we have done in accounting, but in sustainability with the rigor, credibility of financial market in a mandatory regulated disclosure regime that will bring credibility, bring global comparability, mitigate and eliminate greenwashing, right? So this is a very significant endeavor. And I'm very happy to update members today that we didn't have to wait for 20 years to get 147. You know, within a short 2 years, we already have 36 jurisdictions. And this 36 actually includes the European Union, which itself is 27 member country. So it's a much larger pool, have already embarked on the journey to report under IFRS Foundation's ISSB standard, creating a much faster momentum than what the accounting has been able to do. But of course, the accounting side, created that foundation for us to work on. Now, these 36 jurisdictions already represent, over 60% of global GDP, over 40% of global capital market, and if you exclude the United States, is over 80% of global capital market size, and well over 50% of greenhouse gas emission. So this is a very, very fast momentum. And I'm also very happy to report, and this is to IFC's mandate, that is many developing country, emerging markets on the journey, including Turkey, Brazil, Nigeria, Kenya, China, Indonesia, Malaysia, and many developing country jurisdictions, because regulators and policymakers recognize, especially in developing countries, the positive momentum this will create in terms of unlocking potential investment opportunity, right? If you go to any global investor, when you say, why don't you invest, in Mozambique, in Zimbabwe, a typical answer would be, I don't have data to use to make informed decisions, right? So by early adopting ISSB standard, global South and developing country entities cross that threshold. Look, now we have an international reporting standard that has been endorsed by IOSCO, that will give you the set of data you need to report, and therefore, hopefully, with this, more finance and more investment opportunities will be generated. And of course, in this regard, the banking sector plays a critical role, and therefore, I think SBFN, our partnership with you, is truly meaningful, right? So as I work in development finance for 30 years and coming from IFC, my role at the foundation is really to draw attention to the specific needs of emerging markets, developing countries, in terms of providing capacity building, to make sure we have a level playing field, so that developing country companies and banks feel they are ready to begin reporting under this standard. And this is under, this kind of common recognition that we are very grateful for you to sponsor this three courses, seminar series, in terms of sharing what we are doing. And I think this one led by Jonathan and his team, is really critical in terms of looking at what is the proper policy rationale, what is a typical jurisdictional roadmap should look like. And we actually developed a lot of tools in supporting jurisdictions steps or the roadmap in terms of from conceptualizing to actually having the regulatory framework for companies to adopt and use a standard. So really, really appreciate this opportunity, and hopefully over the next 3 sessions, our team will explore different jurisdictional approaches to adopt. And I think Jonathan and team will introduce our jurisdictional roadmap development tools and provide practical guidance on implementation. So really value your participation and look forward to engaging with your questions and insights throughout the series. So by working together, we can create a more sustainable and transparent global financial system that works for all economies. Let me end in by a final story, and this is a story I want to tell when I was in IFC. That is many, many years ago, when China started to open up, IFC invested in a number of banks in China, and these are small stockholding banks. And I visited one of them years later. This bank was a small, local municipal bank based out of Fujian province, right? It started very small, but because of IFC's equity investment, IFC's Equator Principle, IFC's ESG, requirements, the IFC appointed board member was pushing and encouraging the bank, to really embark on a very sustainable way of doing business, both domestically, later internationally. So that bank, by the time I visited them, was already the 8th largest bank in China, 20th largest in the world. And they were the first Chinese bank, to commit to ESG, to really earn a golden star in terms of sustainability transcending their business. That's the Industrial Bank of China. Ron, I think thanks to you and your team's work in terms of turning an emerging market bank into a powerhouse by doing green and doing good and doing well together. So with that, my best wishes for the seminar series, and let me return the mic back to IFC. Thank you so much.
Thank you, Rong, and thank you, Qindong, for recounting how we got here and stressing the importance of this collaboration between IFRS and SBFN. And if Qindong was talking about the past, our colleagues from the IFRS Foundation, Jonathan Bravo and Mosereleti Mokojuane, will be talking about the future. They will shortly talk us through the jurisdictional approaches for how countries can adopt the ISSB standards. As part of their presentation, we will also hear directly from the National Bank of Rwanda, sharing the country's experience with adopting the standards. And after the presentation, we will use the last 10 to 15 minutes to take questions. Jonathan, over to you.
Thank you very much, Jana. And let me just start again by thanking Rong, yourself, and Taeko and the SBFN team for this partnership. We're delighted to be able to run these 3 webinars together with your members, and we're delighted to have presence from around the world, and we're really excited because of the key role that both prudential authorities as well as the banking sector and the industries can play in supporting jurisdictions advancing in their considerations to adopt our standards. So our goals, after we have concluded the series of 3 seminars, is that we're able to enable both the regulators, the relevant authorities, but also equip the industry associations, the key stakeholders, those that actually operate in the markets, with a series of considerations to support jurisdictions, just trying to move ahead in supporting their capital markets and supporting, again, the provision of comparable, high quality, reliable information that enables investors determine whether they want to allocate capital to sustainable finance initiatives. So with that, let me see if I can just put together my slides. There we are. I trust you can see that. So I have the pleasure to be accompanied by my colleague Mosuruletsi Mokotlane. He will be delivering part of the session, and again we'll stop towards the middle of the presentation to allow, I think, the Central Bank of Rwanda to be able to share their jurisdictional experience as well. And we believe they will be joined as well by colleagues from GIZ, again, that they have been so instrumental in advancing Rwanda's consideration. So let me just start perhaps by reflecting on what are the ISSB priorities, because I think this is going to be important to frame this set of foundational information that I believe will be relevant throughout the series. So as we stand today at the ISSB, we have basically three pillars, three priorities that we're trying to progress, and this is going to happen in 25 and 26. The first one is, of course, as Jingdong and others have indicated, we do have a number of jurisdictions that are already advancing and progressing towards that ladder of adopting or otherwise using ISSB standards. So we're trying to equip, again, market participants, particularly preparers, to be able to advance how they implement ISSB standards. At the end, our goal is really to ensure that there is a provision of high quality disclosures that can really inform investment decisions. So we're investing time in ensuring we work through the tools, the educational materials, we engage with the relevant audiences to ensure we are supporting properly the implementation of S1 and S2. Perhaps the focus of the series that we're conducting in partnership with SBFN is really try to support jurisdictions advancing, again, their adoption considerations. And we have devoted quite some time to develop tools, resources, materials to support regulators in those considerations. As many of you will be aware, there are different regulators that are involved, ranging from standard setters, the accounting organizations and authorities in different jurisdictions. In some other cases, it's the bank, the central banks, or the capital market authorities. And we're trying again to think broadly as to which are the authorities we can actually enable to have proper information about how they can move along in their adoption considerations. But of course, even before our standards become introduced into regulatory frameworks, we're also willing to ensure that companies that want to voluntarily adopt our standards to enhance their dialogue with their investors can also make use of our standards. And the third pillar is certainly we have developed S1 and S2, and you will be aware that we are starting to work on those areas that we had advanced in our work plan, human capital, nature, enhancing SASB standards. So those aspects that we will be progressing in the future. And we have completed our first phase of research, and we're taking stock as to how we will be moving along. So with that, Jingdong mentioned already that there are a number of jurisdictions already making progress, and he referred to 36 jurisdictions, which you can find now on the screen. And I think he very rightly mentioned that we're seeing, again, progress literally in all regions of the world. And again, I'm particularly encouraged to see how the Global South, how emerging markets and developing economies are actually really making central to their policy considerations how ISSB standards can support their capital markets. And I do believe, we were just having a chat with Jana before, that many of you probably on the call will see the names of your jurisdictions already signaled here. So again, thank you very much, I think, for your support. But of course, our ambition is to continue to expand the family. Jingdong mentioned there are over 140 jurisdictions that have adopted the IFRS accounting standards. And hasn't even been 2 years since we launched ISSB Standards, and we already have 36 jurisdictions already taking steps. What is important here is that they're truly representative of GDP, market cap, and we believe this will generate an important traction across other jurisdictions through value chains. So this is why many other jurisdictions are actually expressing an interest in becoming familiar with our standards and becoming familiar with our regulatory related adoption tools so that they can actually step up their game and think about their adoption considerations. If SBFN brings together the main banking authorities in the Global South, similarly, IOSCO has also identified the need to support what they call its Growth and Emerging Markets Committee, very much representing MDEs, the Global South, and they have set up a dedicated network, again, to try to equip and enable their members to have capacity building, information sharing forums and vehicles, and again, try to identify capacity building needs that will be pertinent. So I'm sure that many of you will identify your peers also being part of this group. From the IFRS Foundation, what we're trying to do is to ensure we are present in those forums where we can actually try to reach out to all of those jurisdictions that are expressing an interest in getting to know our standards better. Let me just share perhaps with you some more recent information around adoption trends, because we did run a survey in Q1, again, bringing together standard setters and jurisdictional regulators. And the purpose of the survey was, again, to try to equip ourselves in the process of developing transparency for the market, but also try to identify how we can progress some of the tools that we have identified in our regulatory implementation program, and I'll touch on that later on. Just sharing some of the conclusions, we got input from 56 jurisdictions altogether. What we did is we grouped the feedback we got from jurisdictions within the EU, the EEA area. We grouped them into one single jurisdiction. So altogether, 49 jurisdictions. All of them responded that they have or plan to introduce sustainability-related disclosures in their frameworks. And 47 out of the 49, they foreshadowed that they have adopted or plan to adopt ISSB standards. 76% of this have declared that their jurisdictional target, again, I will touch later on, and this will be a feature that we will be exploring in the webinar series, how jurisdictions can actually phase in and scaling requirements. So once they have fully implemented and executed their roadmap, 76% will be fully adopting ISSB standards. 9% will be adopting the climate requirements in ISSB standards, and 10% will be permitting the use of the standards. So a pretty significant amount will be moving towards mandatory application of ISSB standards in their jurisdiction. Some may start with a climate-first approach, again, targeting the expansion of the scope of the framework in the future. And we also asked about how those jurisdictions are actually thinking of additional information beyond the information that's required by ISSB standards. And certainly many jurisdictions did reference GRI standards. And of course, the Europeans did mention that ESRSs do have that broader scope in terms of the information that's being required and in terms of the recipients and the intended audience of the disclosures spanning beyond investor needs. So progressing again in those considerations, I mentioned before that many jurisdictions will be progressing over time. This is a new language, as Jing Dong mentioned, and for us, it's really critical that jurisdictions think about quality reporting. I think we are not in that race to the bottom to ensure to try to be the first jurisdiction coming on board. We need to ensure that at the end of the day, market participants, both investors, users of sustainability-related disclosures, as well as preparers, their market readiness has been properly assessed. And this is something that's really featuring in jurisdictional approaches. 70% will be phasing in requirements, starting with perhaps a subset of standards for a smaller subset of publicly accountable entities, with, again, staged approach expanding requirements over time. 30 jurisdictions already mentioned that the full set of requirements will become effective by the end of 29. And again, given our focus is to ensure that investors receive quality, reliable, trustworthy, consistent information, we are again trying to ensure that jurisdictions think about the overall ecosystem. What are the different bits and pieces that they will need to address in order to ensure that their framework is sound, comprehensive, and consistent. And of course, assurance is a critical element there. But one thing we have already identified is that jurisdictions are trying to settle first their reporting frameworks before they progress and move along in their assurance considerations. So before we delve into the jurisdictional guide, which is actually the foundational document that underpins the tools and materials that we're providing for jurisdictions and regulators to move ahead, let me perhaps describe briefly how the jurisdictional guide features in what we call our regulatory implementation program and our implementation partner program. So the jurisdictional guide is just one of the key pillars, together with, again, the adoption toolkit. I think Jing Dong mentioned before that we have recently launched the Roadmap Development Tool, and we will be spending the second session and the third session diving deeply into the Roadmap Development Tool. But again, it's particularly relevant to ensure we also produce materials that enable regulators, you banking authorities, being able to engage with your policymakers, with your counterparts, regulatory counterparts in the capital market side of things, in the insurance sector, with the industry associations. It's important that the policy rationale underpins any decisions towards the adoption or other use of ISSB standards. And certainly we are also cognizant that while we are developing educational materials that are intending to equip all different stakeholders, ranging from preparers, assurance practitioners, there's also a need to ensure that regulators are able to step up their games. We are willing to upskill them in their considerations. Certainly, the roadmap just gets the process started, but there will be, at the end of the day, supervision, enforcement of disclosures, there will be assurance, and it's important that we have a comprehensive picture of all of that. But the IFRS Foundation remains, again, a relatively small organization. We are focusing on ensuring, as a standard setter, that we have the standards, the educational materials, the guidance that different stakeholders may need. So we are certainly willing to partner with international bodies, MDBs, bodies like IOSCO, the IFC, to ensure that through their networks, through their expertise, through their country connections, they're able to use our tools to reach out to the different jurisdictions. So it's pretty central in our strategy, enabling what we call implementation partners to be able to progress those considerations. So basically, this slide represents how all the pieces come together. The IFRS Foundation, the ISSB, developing the different materials, including the jurisdictional guide, the Roadmap Development Tool, some of the regulatory related content that are going to be central in enabling implementation partners in supporting jurisdictions. And again, we're trying to make this materials suitable for being used directly by you, jurisdictions, regulators, as well by forums such as the GEMC forum, SBFN, and through the MDB program, so that our materials are being incorporated into the respective toolkits in a way that we try to baseline the type of information we're providing across the different platforms and forums. I'll perhaps skip this one, and without further ado, I'll hand over to Mosir Letzi to guide us through the jurisdictional guide. Mostly with that, the floor is yours.
Thank you very much, Jonathan. We can move to the next slide. So in July 2023, the IFRS Foundation issued for the first time a guide to assist jurisdictions in their journeys to adopt or otherwise use the ISSB standards. This was known as Adoption Guide Overview. And this was the starting point to support jurisdictions in their adoption processes. And then this was followed with the preview of the Inaugural Jurisdictional Guide in February 2024, which was a means of continuing the journey to adopt to assist jurisdictions with their adoption journeys. For the next slide, Jonathan, then in May 2024, we saw the IFRS Foundation now issuing the Inaugural Jurisdictional Guide for the adoption or other use of ISSB standards. This guide supersedes both documents that were previously issued, and it is means to assist jurisdictions with working on a consistent and comparable sustainability-related adoption approaches, which promotes the global comparison and consistency on the sustainability-related disclosures for the capital markets. Through the use of the adoption guide, the jurisdictions will see to it that there are features that are identified in the guide to really indicate what the IFRS Foundation will take into consideration when we actually describe the approaches that jurisdictions have adopted. And that provides transparency not only to the jurisdictions, but also to the various stakeholders, such as the investors, such as the MDBs, who are keen to understand the landscape or the ecosystem in various jurisdictions to be able to make a decision on the allocation of their resources. Moving on to the next slide. So the purpose of the providing transparency on the jurisdictional approaches through the jurisdictional profiles is that the investors will actually be able to assess and compare the timing, the depth, and the nature of the introduction of sustainability-related risks and opportunities in various jurisdictions. And for regulators, this prepares you with the adoption or other use throughout all the steps from the policy rationale through to the readiness check to say what mechanisms should we be looking into account or considering as we map our way forward. And in addition, it will also provide you with the extent to which the various jurisdictions have been able to introduce the sustainability-related disclosure requirements in their ecosystem, and therefore provide that peer learning mechanism amongst the regulators. Through this, we provide or we assist the MDBs such as IOSCO to really be able to monitor the extent to which they can provide assistance to the jurisdictions in their various classes of the economy, and it also assist the IFRS Foundation to provide through partnership with other stakeholders to provide that capacity building effort and continue to identify the need for educational materials. Moving on to the next slide. So in the guide, we have actually identified 11 features which would be used by the ISSB to really describe the jurisdictions in terms of the approaches that they have considered to introduce sustainability-related disclosure requirements in their ecosystem. So in the next webinars, we'll actually expand more on these 11 features, which have actually been categorized into 4 decision areas of the how, the who, the when, and the where. And we'll actually see that in the last slide when we introduce the Roadmap Development Tool. So just to quickly run through these, we're actually saying at the first instance, the jurisdictional guide actually recognizes that there's a need for legal action if a jurisdiction is to actually introduce sustainability-related disclosure requirements in its legislation or framework. And that's where we talk to a regulatory or legal standing. So the legal action that is taken to introduce sustainability-related disclosure requirements. So how do you introduce the requirements? And then secondly, we talk about the degree of alignment, that is the extent to which the ISSB standards, their requirements are actually transposed fully transposed into the jurisdictional requirements, or if they are applying local requirements, then the extent to which those local requirements are designed to deliver functionally aligned outcomes to those resulting from application of IFRS S1 and S2. And then we also look at the extent to which these requirements apply to the publicly accountable entities, not so much on the number of entities, but on the size of the entities compared to the size of the jurisdictional economy. And then we also look at the specific requirements, such as where the disclosures are required, who is required to report any additional disclosures, jurisdictional modification, including when the requirements would be expected to apply to the entities within the jurisdiction. So with this, we'll be able to now say, where does the jurisdiction fall in terms of the description, which are in the next slide. If you go to the next slide, Jonathan. So here we have the different jurisdictional approaches that we will use to describe the different jurisdictional approaches that will have been adopted by the or applied by the different jurisdictions. And we must say the adoption process or the other use of ISSB standards takes into consideration the jurisdictional circumstances. It takes into consideration the readiness of the market. And through that, the jurisdictions will now find means of either phasing in or scaling the requirements as they see fit. So here we have the 7 descriptions that we will actually use, and details of this can be found in the Inaugural Jurisdictional Guide, which is also there on our website. So quickly running through this, we have committing, that is where the jurisdiction has issued a public policy statement committing to the adoption or other use of ISSB standards. And they have also issued or published a credible roadmap showing their timing, their plan to adopt the ISSB standards. That is, how are they going to be doing that? So following from that, then we have the permitting, that is the explicit requirement in the explicit permission in the local legislation or legislative framework to adopt or use the ISSB standards. This can actually be a better means of allowing the market to develop and allowing the market to actually build on expertise while working towards full adoption of the ISSB standards. And then partially incorporating ISSB standards is basically applied where either the jurisdiction decides to exempt the reporting entities from some of the requirements in ISSB standards, or actually modifying the requirements that are provided for in the ISSB standards. And then we have the 2 that are more on the extent to which the jurisdiction extends the transitions that are already provided in the ISSB standards. So the timing of the extension is the one that we refer to in the 2 middle areas there of adopting with extended transition and limited transition. And then where the jurisdiction elects to apply a climate first approach while also requiring the climate relevant provisions in IFRS S1, then they will likely be described as adopting climate requirements and ISSB standards. And full adoption of the ISSB standards or applying the local requirements or standards that are designed to deliver functionally aligned outcomes will be likely be described as fully adopting the ISSB standards. So this, as I've indicated, they expanded more in the Inaugural Jurisdictional Guide, and we'll look into them also when we move on to the next webinars, when you look at the jurisdictional, the roadmap development tool, rather. On the next slide. So before going on to the jurisdictional, the next steps, I think we can bring in the representative from Rwanda Central Bank so that he can share how they have introduced or how they have played a role in introducing the ISSB standards in their legislative framework, and then he will also be followed by GIZ to share how they have supported Rwanda in doing the same, and then following that, then we'll come back and do the next steps, and then continue from that. Over to you, Olivia.
Thank you, Mozi. Thank you, Jonathan. And as you rightly said, I'm Olivier Mugwaneza. I'm from the National Bank of Rwanda. Just to share a few thought of how we developed our standards adoption. In Rwanda, as you probably may know, it's a landlocked country, but in Rwanda we are affected by several physical risks, including, for example, floods, including also droughts in the east of the country. So climate risk is imminent. In 2023, we had a lot of floods that affected different sectors, including the financial sector, because we saw NPLs going up as a result of the floods that we had. So we had to look at what we can do as a central bank. And we started by doing a diagnostic review first to understand, is this affecting us as a financial sector, but is it also affecting the financial institution that we regulate? And we found yes, but we also during the diagnostic review found that it was necessary to look at the readiness of financial institution. And while looking at the readiness of financial institution, we found, of course, capacity was an issue. And one of the things that the institution were requesting is they needed to have guidance. And we found it relevant that we should, as a central bank, provide guidance to the financial sector. So what we did was to work with the different partners. By the time we as a country, Rwanda, we were working with IMF to see how we could access or enable capital flow to Rwanda. And the IMF actually allowed Rwanda, looking at the commitment that we have had in the past and how we have executed, to access the resilience and the sustainability trust. Now, when we access the resilience and sustainability trust or facility, around 319 million by then, it was necessary that we do reforms. And one of the reform was, of course, to guide the sector, which we already had thought of. And we provided first the guidance on the risk management, climate-related and environmental-related risk management guidelines that we issued around November 2023. But those were mainly on risk management rather than disclosure, even though they had a chapter on disclosure. So again, another requirement was also to provide detailed guidelines on the disclosure and in line with the issued standard IFRS S1 and S2. So that being a requirement, but also being a necessity, we engaged through partnership with GIZ. We engaged the IFRS Foundation, and I think we met Aria, Jonathan, Mozi, and the rest to see how we could adopt. So from a central bank point of view, we thought it was very necessary that we guide the financial sector. But engaging with the IFRS Foundation, the ISSB Foundation, or the ISSB, the International Sustainability Standard Board, we realized that actually it is necessary that we don't go around as the regulator of the financial sector. We realized it was necessary that we go along with other sectors, including the non-banking financial institutions, but also non-financial institution at all. So we had to initiate a consultation process, and we had a roundtable around, I think, July 2024 to see how we could go as a country. But noting that probably as a financial sector, we needed to move ahead, we took it parallel and we said, let's develop the guidelines for the financial sector. and see how we could implement it in the financial sector as we engage with the Institute of Certified Public Accountants of Rwanda, which is the one in charge of the implementation of the standards. Of course, first we looked at, if we put these guidelines in place, do we have any legal standing, as Moses was saying? And we looked at our company law. We found that it was requesting that companies adopt or use international standards, and we found the ISSB standards, IFRS S1 and S2, also being the standards, the international standard that we should go. So, regarding speaking, we found it was okay. But we also said, as we move as a financial sector, how do we involve the rest? So we called a roundtable, which was involving Capital Market Authority, which is also another regulator, but also other regulatory board. For example, the Company Register, which is the Rwanda Development Board, and the other players like the Ministry of Finance, including also not only the Ministry of Finance, but the Revenue Authority, and we have Kigali International Financial Center, which is the one trying to make Kigali as an international center, and many other stakeholders that we found relevant. So we brought them together, and we agreed that we, through the steer or through the leadership of the Institute of Certified Public Accountants, we are going to develop a national roadmap. So that's how we formed a steering committee, which is currently developing a national roadmap. But as much as we did that as a central bank, we continued under the Resilience and Sustainability Trust target to develop first the guidance. So I'm happy to share that in November 2024, with the help of the GIZ, I see of course, Daniel, who is here, will also share his experience working together with us. We are able to issue the guidelines, which is the guidelines are available on our website. And if you look at the guidelines, I think what we did was to look at, because we don't only regulate banks, we regulate other financial institutions like insurance, microfinance institutions, payment service providers, pension funds. So we had to see, how do we implement these standards? Do we implement them at the same time across all financial institutions? And we found we needed probably to balance the information needs and the availability of the information itself, but also the capacity. So we grouped, as we had done it in the 2023 guidelines on risk management, we grouped financial institutions into different categories, and we have Tier 1 to Tier 4. So Tier 1 are those that we thought have big muscles like banks and insurance companies, so they have to go fast. But even those, we didn't ask them to fully comply. So we put them into 3 phases. So it's a phased-in approach. And if you look at our guidelines in total, you will find that probably we started with the climate fast approach. But even climate fast approach, we did give some, I would say, exemption to the requirement of IFRS. So it's not like they are going to apply everything there in. For example, on the materiality, we exempted the obscuring part of it in the first year of application. On comparability, there are some exemption in the first year. And the first year of disclosure will be the year starting from January 2025. So we expected the first report to come in, probably the disclosure in 2026 when they report for 2025. So you see, we took that phased-in approach, and this is also what we see the national roadmap coming to, because we are also on the steering committee as a national bank. We are on the steering committee, which is developing the national roadmap. And we've seen that we are taking the same approach even at national level. The relevance of taking it to national level is that even the financial institution, when they report, they will need data from their clients. So if their clients are not reporting, then it might be difficult for the financial institution to find the information that they need. So it's very important, and it was very important. Maybe one thing that I could also mention is that our guidelines recognize that once the national roadmap is developed, as a central bank, we could consider if we need to update our guidelines or leave them as they are. if we find there are no much discrepancies between us and the national roadmap implementation. And we also recognize that we might need to update our guidelines if the International Sustainability Standard Board issues further standards. Let's say a new standard on human capital biodiversity comes out in the future. So the guidelines have made provision for that. So in a nutshell, that is our experience. We are trying now to work with the financial sector to see how we build the capacity. We have already engaged the financial sector during the development of the guidelines, and even we have started the dissemination of the guidelines. We find capacity building and data availability as the key challenges, but we are working with different stakeholders to address these challenges. So that is our experience. I'll stop here and maybe let Daniel also share his experience working with the National Bank of Rwanda. Thank you.
Great. Thank you so much, Olivier. My name is Daniel Müller. I'm an advisor for sustainable finance at GIZ, the German Development Cooperation Agency. And in this capacity, supported the Rwandan partners in adopting the ISSB standards. Olivier already alluded to many of the most relevant points, but I would really like to highlight that while the achievement of BNR in developing the sustainability disclosure regulation, the guideline, is very impressive on its own, this really just marked the beginning of Rwanda's national ISSB adoption journey, which culminated in the development of Rwanda's national ISSB adoption roadmap, covering both financial institutions but also non-financial institutions, and outlines in detail the scope of the requirements and the sequencing of the requirements across the Rwandan entities. The adoption roadmap is being finalized right now and will be launched quite soon. So as both the BNR guideline on the ISSB standards and the adoption roadmap were supported by GIZ, let me just reflect on some of the main takeaways from this national adoption plan. Basically, starting our engagement mid-2024 with BNR to support them in developing their ISSB adoption guideline. We also initiated discussions with the other national regulators, and it became clear that next to BNR, also other regulators were considering already initiating the development of disclosure regulations for sustainability, which on the one hand showed a high level of interest in this field, but on the other hand, also an urgent need to align the reporting requirements and develop a holistic adoption approach covering the financial sector, but also the real economy. This also became quite clear, and Olivier already alluded to that, when we were talking to financial institutions who really highlighted that availability of high quality data, particularly from their clients, their portfolio companies, would be a major challenge for reporting. So there was definitely a need to have a national plan to make sure that the data would be available from within the real economy for the financial institutions to be able to report accordingly. So on the basis of those thoughts, GIZ started to work with the Rwandan Institute of Certified Public Accountants, ICPA, and supported them with forming the National Steering Committee, which is being led by ICPA and has representatives from all the main regulators, being BNR, the Central Bank, the Capital Markets Authority, and the Rwanda Stock Exchange, as well as some additional stakeholders. We already mentioned the Ministry of Finance, the Development Bank of Rwanda, Rwanda Finance Limited, and the Rwanda Development Board. So the steering committee was then tasked with developing a national plan towards the adoption of the ISSB standards, which is the ISSB adoption roadmap. And the thought process behind the development of the requirements was quite similar to the ones we had in the process with BNR. So the roadmap should feature a phased introduction of the ISSB requirements over several years, and simultaneously also have an increase in the scope of entities that are subject to the regulation. So the basic idea was that the largest entities with the most capacities, the most resources, the most experiences in the field should be the first movers in reporting or in having sustainability disclosures, while the relatively smaller entities should be phased in to have more time to develop the necessary capacities and to also learn from the experiences from the larger entities. One thing that's particular of the roadmap is that it really phases in the requirements, stating or telling the institutions which capacities they should develop first in order to really have a plan in that regard. So while we're talking with the regulators and the private sector, it also became apparent that next to the issue of data availability, capacity building would be a key factor for the successful implementation of the ISSB standards. And for this reason, the ISSB adoption roadmap also will outline a variety of capacity building measures for regulators, for the preparers of the reports, assurance providers, and some other stakeholders who will be relevant. And we believe that building a long-term capacity building strategy will lay the foundation for successful sustainability reporting in Rwanda. So as a closing remark, we just thank Olivier and the Rwandan Steering Committee once again for the good cooperation and congratulate you to the achievement in the field of sustainability disclosure. I think this really shows Rwanda's strong ambition to position itself as a sustainable finance hub and as a leader in the space of sustainability reporting. And I believe there's a lot to be learned from the Rwandan approach for other jurisdictions that want to adopt the ISSB standards and want to align their national reporting requirements to achieve global comparability of sustainability disclosures. And in that regard, GSN stands ready to support our partners in this endeavor. Thank you.
Thank you very much, Daniel. And perhaps just very quickly before turning into Mosir, let me just join you in congratulating the National Bank, I think, of Rwanda, but as well all the different authorities, I think, in the jurisdiction. For us, it was really compelling to see how they were able to put together a jurisdictional ambitious roadmap, trying to think comprehensively about how the different regulatory pieces come together. So a very compelling approach. We look forward again to Rwanda taking steps towards the implementation of the roadmap, which we think, by the way, it's really well thought and really outlines a lot of considerations in order to support the regulators, conclude the regulatory actions that are needed, but as well the Rwandan stakeholders progress, I think, with certainty as to what are the different milestones that are being put ahead. So with that, thank you, Daniel. Again, we'll turn to Mosi Retsi. Mosi, floor is yours. I'll bring back the slides.
See, I don't think we can hear you. Jonathan, can you hear Mosi?
No, Mosi, not sure whether you can hear us, but audio seems disabled. Mosi, we cannot hear you. My apologies for that. Let's perhaps, in the interest of time and until Mosi resolves, I think, the audio stream, let's perhaps just chart ahead. And again, we just wanted to share with you some of the educational materials that are available. And as you know, since we published the standards back in June 23, we have been issuing different bits and pieces that we believe will be supporting different areas. And of course, the comparison of IFRS 2 with TCFD, as you know, TCFD is embedded into both IFRS 1 and IFRS 2. So we wanted to ensure that there was a proper comparison as to what are the differences and what's actually so central in IFRS 2 building from TCFD. As well, we also try to complement IFRS 2 with some educational materials reflecting on some of the interdependencies and some of the nature and social aspects of climate-related risks and opportunities. And again, for those of you that have been following the discussions of the board in the last few sessions, you will know where we stand with respect to both our social, human capital related projects, as well as biodiversity and nature related projects. So all of that is, we had a board meeting last week, and the materials, I believe, are available on our website. Back in 2024, we also released a number of materials, and all of these are available on our Knowledge Hub, on our website, so all of you can have access to those. And I think it's always worth, again, in that exercise of trying to keep ourselves abreast of what's really available, what are the tools that you can rely on, and sharing perhaps experiences, again, trying to reflect on those materials. So again, interoperability considerations for GHG emissions on GRI standards and ISSB standards. We also released a pretty critical educational material for both those companies that will be reporting and will be confining initially a reporting to climate, but as well to those jurisdictions that have decided to take a climate-first approach. There's a piece on how to use IFRS as one in the context of climate reporting. You know that SASB standards are pretty fundamental in the delivery of information on industry-specific that is critical for investors. So how to use ISSB standards to identify material information on sustainability risks and opportunities, and what are the relevant metrics, information, and webinars on current and anticipated financial effects. We'll be talking later on about the interoperability guidance between ESRSs and ISSB standards. So a whole set of materials already available in 24. And in 25, a critical piece that is it's going to be very central to the Roadmap Development Tool, which is an explanation of the proportionality mechanisms that are embedded in ISSB standards. Again, by reflecting on the features that we have discussed on the jurisdictional guide, on the possibility to phase in, extend transition reliefs, how to start with a certain group of publicly accountable entities to expand the requirements later on. I think the proportionality considerations and scalability are also important in the jurisdictional guide. But again, some materials that are coming up around transition plan disclosures and climate-related scenarios. So stay tuned, because all of this will be available very soon on our website. I'm trying to move ahead. I know that many of you have been following developments in Europe, particularly how ESSB and standards together with ISRS, how they are aligned. So I think we published an interoperability guide that is intended to support both those users that may be starting with reporting against CSRD, so using ESRS standards, but may also want to use disclosures to assert compliance with ISSB standards and vice versa. So what we try to do is, again, working together very much with our colleagues in IFRAC and the European Commission, we try to work on identifying disclosures that are common for us. As we've noted a few times, it's really important that our standards are being perceived as delivering information that is comparable, that is decision useful for investors, but it's also critical that we try collectively to reduce the reporting burden, and we come up with a smart regulatory regime that doesn't result in excessive burden and duplication. So we've been working very closely with our European counterparts to try to reduce the complexity, the fragmentation, and again, try to ensure we maximize the usefulness of this educational materials. So you will be aware that there's a high degree of alignment, and we have announced this repeatedly together with the Commission and IFRAC. There's a high degree of alignment when it comes to climate-related disclosures. There are certainly some disclosures that pertain to ISSB standards that are currently not included in ESRSs. And again, ESRS's CSRD has additional requirements in order to meet the needs of other stakeholders that may be interested in impacts and information. Again, they do have some standards that go beyond climate, but that is, again, something that our standards also provide with IFRS S1. So what we've tried to do with the interoperability guidance is ensure we're providing practical support to help companies navigate in an efficient manner how they can actually comply with both sets of standards. So critical elements that feature in the interoperability guidance relating to materiality, the presentation of disclosures and sustainability topics are central there. Again, one important consideration is that even though we are noting that there is a high degree of alignment, that doesn't mean that a user applying ESRS standard will be able automatically to assert compliance with ISSB standards. There are certain decisions, certain options that a preparer will need to make as to how, what are the methodologies used, how the information is being presented in order for it to be able to assert compliance with ISSB standards. So we're being very specific here, trying to ensure that preparers can identify those decision points where if they intend to be able to assert compliance with ISSB standards, what's the mechanism I think they need to apply. This is again an important consideration that we're raising in our regulatory related materials for jurisdictions, because we think that it is important for those jurisdictions that may be thinking of streamlining reporting requirements for subsidiaries of foreign entities that may be using ESRSs. I think it's important to note that without the prescription of the interoperability guide to be able to navigate the disclosures in a way that they can assert compliance with ISSB standards, that type of equivalence will not be granted automatically. So there is a process that preparers need to go through in order to be able to assert compliance with ISSB standards as well. So as I mentioned before, the guide really explains, I think, in detail how disclosures need to be prepared, how compliance can be asserted. It is important, again, to reflect on section 4.2 as to what are the additional climate-related disclosures that are contained in ESRS standards that are not included in ISSB standards. I think all the considerations regarding materiality are also relevant, and we invite, again, preparers to look into those provisions. And again, it's really important, one requirement that it's included in IFRS is one with respect to the information that is designed to meet the needs of investors, being clearly identifiable, prominent, and not obscured with the additional disclosures. And again, it is important that preparers navigate those considerations, because that is fundamental in order to be able to meet the requirements in ISSB standards and ensure that the information remains decision useful for investors. So I've touched on this, and I think in the interest of time, I will be perhaps just noting that interoperability is an ongoing process, and we continue to work not just with the EU, but also with our colleagues in GRI to ensure that our future work, interoperability remains one of the foundations of that. So work on digital reporting, that's something that we will be continuing to do together with our counterparts. When we progress or work on biodiversity, ecosystems, human capital, that is again something that's very central. As I mentioned before, we will be issuing educational materials on transition plan disclosures, and this is an area where many different regulators have already aligned the need to ensure there is, again, a comprehensive approach that reduces the risk of fragmentation for the benefit of investors. So all of those considerations are very central to our work going forward. So just very quickly trying to outline what we will be covering in webinar 2 and webinar 3. As we mentioned before, we released towards the end of March what we call a roadmap development tool. So that tool is already available to you on our website. We will be diving into the roadmap development tool, which we believe will be instrumental in supporting regulators, but also inviting industry associations, participants in the market, to ensure they can actually provide proper input to the regulators as they consider market readiness, the availability of companies to progress successfully in the roadmap. So with that, Jana, I'll perhaps turn back to you in order to get any questions, I think, from the audience.
Thank you, Jonathan, and thank you, Mossy, for the informative presentation and really setting the scene for the next two sessions, and Olivier and Daniel for sharing the Rwanda's experience in adopting the standards. One thing that stood out for me was definitely the role of financial sector regulators in convening other sector regulators and associations and other stakeholders in the country to develop a holistic approach to the standards. I would like us to take the next 10 minutes to take a few questions from the audience. I noticed that there were a few questions about the tools and the websites, and I pasted those links in the chat. Teiko, are there any questions that we can get Jonathan's and Mossy's insights on? I cannot hear you, Teiko.
Hello, Yana. I think so far from the audience, we have the training questions.
Okay. Well, Jonathan and Mossy, we previously, during the registration process, received a few questions, especially focused on the interoperability. And while you talk about the ISRS, can you maybe just highlight what is the relationship between the ISSB standards and SASB and TCFD standards and recommendations?
Yeah, thank you very much, Jana, for the question. I think it's pretty important. And I know you had the chance in previous webinars to have a deeper dive into what's really the contents of IFRS 1 and IFRS 2, but I think there's no harm, again, in just reminding our audience that, as a matter of fact, TCFD plays a really important role in the architecture of our standards, because, again, most of the disclosures are required to be organized around the 4 pillars that feature in the TCFD recommendations. So both when it touches on all sustainability-related risks and opportunities, but also climate, information is required to be organized around governance, strategy, risk management, metrics, and targets. So that is a good way that we believe it's going to be providing some continuity as well in the way that investors, creditors look into disclosures from ISSB. SASB standards, as you know, they've been operating for some time now, and it is, again, another fundamental pillar of our standards, because our standards require the provision of industry-specific information. As you can imagine, information varies significantly from sector to sector. It's very different to think about the sustainability risks and opportunities of an airline than that of food and beverages or oil company. So the risks do vary significantly. The value chain considerations also vary significantly depending on the industry. So we believe that, and this is something that investors have been demanding over time, there is value in the information being provided on the basis of industry-specific considerations. And SASB standards do provide a tool, on the one hand, to be able to help preparers identify which are the sustainability-related risks and opportunities that, in accordance with the industry in which they operate, are most likely to be material and to be that should be considered. And it also provides references as to what are relevant metrics in the event an entity has identified that that is a sustainability, as a material sustainability related risk and opportunity, to help identify what are the disclosures that should be provided. So both are pretty central in the architecture of our standards. And again, they both feature importantly in terms of the requirements as part of the core pillars that need to be observed, but as well in terms of the identification of risks and the relevant metrics.
And in terms of adoption, in the countries that already start adopting the ISSB standards, have you seen that the countries that already had TCFD standard in place just now that's been replaced with the ISSB standards, or are they working in parallel?
Now that is a good question, and one thing that we mention is, of course, when we invite jurisdictions to reflect on what are really the different ecosystem considerations, I think one important is to reflect on what are the existing requirements in order to provide climate-related information. And many jurisdictions have either required on a comply or explain basis climate-related disclosures on the basis of TCFDs. Some have made mandatory disclosures on the basis of that regime. Some others also complemented that with having or referencing SASB standards as the framework to provide sustainability-related disclosures. So we've seen that those jurisdictions that had actually already previous experience with TCFD and SASB standards, their preparers are perhaps better equipped to progress at a faster pace with the adoption of our standards. However, I think it's also important, to note that even though both frameworks, feature importantly, jurisdictions can actually they should be looking more comprehensively as to what is really the availability of data, how companies have matured in the process. So we think that our jurisdictions that had actually previously used GRI standards, they are also in a good position to be able to progress in their adoption of our standards. It's important to note that both components, ensuring that there's reference to TCFD standard, the core content in our standards, but ensuring that there's also a requirement to provide industry-specific information are important considerations when we describe jurisdictional approaches in the jurisdictional profile. So that is, again, information that we've made available through the Roadmap Development Tool, inviting jurisdictions to see how they can actually progress in the what's the subset of requirements that they feel they may be able to bring in earlier rather than later. So just inviting jurisdictions to think comprehensively of those frameworks as enablers towards adoption, but they do not, the fact that they haven't introduced that doesn't hinder their availability to move ahead.
Thank you, Jonathan. That's very clear. And we also had a similar question about what is the relationship between the ISSB standards and the IFC performance standards. And for those of you who know, the IFC performance standards are globally adopted standards to manage environmental and social risks. And as such, they fit neatly into the approaches to assess and manage risk. And if the risk is then determined to be financially material, it would be disclosed in line with the requirements of the ISSB S1 and S2 standards. And just adding to what Jonathan was saying, that the performance standards help companies to develop mechanisms to manage the risks, which really speaks to the requirements of the ISSB standards and the 4 pillars, as Jonathan mentioned, the governance strategy, the risk management especially, and the metrics pillars. So there is just another complementarity between those of you who have the IFC performance standards in place, and that would be especially the members of the Equator Principal Associations and the ISSB standards. We had a question in the audience about the ISSB standards adoption in Pakistan. And I don't want to kind of put you at spot, Jonathan Mossy. I don't know how familiar or how closely you are involved in that. But the question in the chat says that the ISSB standards are currently in the finalization stage concerning the country. Is it not mandatory for commercial banks to have sustainable finance policies in place before reporting under the IFRS and other frameworks? The financial industry seems to be lagging behind in this regard. Any insights or reflections?
I'm happy to touch base on that one, Jana, because certainly we've had engagement I think with the Institute of Chartered Accountants, I think in Pakistan, they did put together, I think, a roadmap, and there's been discussions, and I believe that the Securities and Exchange Commission of Pakistan has been progressing again on their considerations that they had actually charted the way ahead, which we think it is important precisely for what our colleague in the audience have asked. It's important to provide a sense of timelines and what are the milestones that will be completed, because it's true that preparers particularly will need to get ready for progressing with the disclosures. And it doesn't happen from one day to another. They need to think hard about their value chain considerations. They need to think about what are the reporting boundaries, what are the entities within the perimeter of influence that they will need to incorporate through perhaps consolidation, because the reporting entity needs to be the same. So I think it's important that they go ahead. I do believe that they're the final stages, if they haven't finalized yet, of completing the framework, and that will of course entail that those listed banks that are listed in the Pakistan stock exchanges will be captured by the requirements, but there will be other financial institutions that may not be listed that I believe the Prudential Authority will need to determine what is the framework that will need to be put in place in order to capture those. And again, we think that it's important precisely because, again, the lending activity of banks, tends to happen with entities in the real economy. We believe it is important that, again, the real economy provides information that will then be used by the commercial banks in their own disclosures. But again, I think that is the regime, which is why it is important for a jurisdiction to think holistically, as you mentioned, comprehensively, of what is really the framework, because there are different regulatory entities that will need to be involved depending on to what extent they want to extend the requirements to all the entities that have public accountability.
Thank you, Jonathan. We also received a question about if there's any other case studies in the Central African region, apart from Rwanda, that can be shared in the future. And my understanding is that it would only be Uganda that already started this process. And then on the continent itself, there's a Kenya, Nigeria, Ghana, Zambia, if that's right. But just to say, we will be sharing case studies in each of the webinars. So in the next webinar, 8th of May, there will be a case study also hearing directly from the country representatives, and then in the third webinar as well. So if you have any suggestions on particular case studies, we will try our best to include them, but we have few speakers lined up. I think we are right on the dot, and I don't want to take people's time because 90 minutes is long. I just want to encourage everyone to register for the webinar 2, in which we will be covering on how to process with adopting the standards and who the preparer should be. So which companies, which sectors, and so on. I would also like to thank Jonathan, Mossy, Olivier, and Daniel for your time, and everyone for joining. And please remember that if you attend all 3 webinars, you will receive certificate of completion. The recording of the webinar, and I believe the slide deck, will also be available on our website after the webinars finish, so you can also find the materials there. Thank you, everyone, and have a great day.